What if I told you there's a company at the heart of AI, gaming, and the data center revolution that has returned over 8,000% in the past 10 years? Today we are diving into AMD, Advanced Micro Devices, ticker AMD, a powerhouse competing with the giants like Intel and Nvidia. Is AMD stock a buy right now, or is it already too hot to handle? Let's find out. Overview. AMD designs high-performance computing and graphic solutions. You'll find its chips in everything from gaming consoles like PlayStation and Xbox to supercomputers and data centers powering AI applications. Its product lines include Ryzen for desktops and laptops, EPYC for servers, Radeon for graphic processors, and recently it's been pushing into AI accelerators and custom SoCs. The company has also made bold moves like acquiring Xilinx, a leader in adaptive computing. This positions AMD to compete in AI hardware alongside Nvidia. In short, AMD is like a modern-day tech armory, building the chips that power gaming, AI, cloud computing, and more. Whether it's a laptop, a data center, or a self-driving car, AMD wants its technology at the core. Financials. Let's look at some key financials. They just announced their Q2 results, and the market didn't seem to be thrilled. AMD reported a record Q2 revenue of $7.7 billion, up 32% year over year and 3% from the previous quarter. However, diluted EPS came in at 48 cents, weighted down by an $800 million charge that shaved off roughly 43 cents per share. For comparison, last year's Q2 EPS was 69 cents, and Q1 this year delivered 96 cents. So excluding this one-time charge, EPS performance was decent, but clearly not enough to impress investors. Forward EPS is now around $4, P/E ratio is just over 40, no dividend, short interest is a little elevated, market cap around 270 billion, 1-year returns around 20%, 5-year returns around 90%, and 10-year returns over 8,000%. I'm speechless. Revenue per share has grown from $8 in 2020 to around $17 now, so more than doubled. AMD has had a decade of almost interrupted revenue per share growth. Normal revenue has also been growing fast. Same cannot be said for the earnings per share. It has been volatile early on, but improved significantly in the recent years. AMD hit $3.50 in 2022, though it dipped after that. Including Q2 results, the trailing EPS is now around the same level, and the forward EPS is expected at around $4. Free cash flow per share turned positive in 2020 and peaked in 21, but since then has come down. AMD's margins and returns on capital aren't looking great right now. The obvious comparison is Nvidia, whose numbers are significantly stronger, although that's not entirely fair since Nvidia is a clear industry leader. A big reason behind AMD's weaker profitability is its aggressive R&D spending as it tries to catch up. On paper, AMD spends around $6.6 billion on R&D, while Nvidia spends around $14 billion. But the real story is in the proportions. AMD allocates roughly 23% of its revenue and 44% of its gross profit to R&D. In comparison, Nvidia spends just 9% of revenue and 13% of gross profit to R&D. That's a huge difference. Investors should also ask themselves, has the $22 billion AMD spent on R&D over the last 5 years truly delivered the returns and competitive edge they were aiming for? So while AMD has shown impressive growth in both revenue and earnings, its recent margins and free cash flow suggest it's now in a more competitive and expensive phase of growth. Whether these massive investments will pay off is something only the investing gods can answer. Future. Let's look into the future with opportunities and risks. Let's start with the opportunities. AI boom. AMD is pushing into AI with its MI300 accelerators to take on Nvidia in data centers. Xilinx acquisition. This expands their market and gives them more flexibility and higher margin products. Gaming growth. Long-term demand from console cycles and PC upgrades remains steady. Diversification. From CPUs to GPUs and FPGAs, AMD is no longer one-trick pony. Risks. Nvidia dominance in AI hardware could overshadow AMD's efforts. If there's only room for one winner, then the future for AMD doesn't look bright. Margins under pressure. The cost of pursuing growth, AMD's underdog position in the key markets, and the ongoing integration of Xilinx could continue to pressure profitability. Highly cyclical industry. Semiconductors go through boom and bust cycles. Valuation risk. At current price levels, investors might be assuming near-perfect execution or simply projecting past growth trends into the future. Intrinsic value. Let's talk valuation. Right now, AMD's forward EPS sits around $4, and analysts are projecting strong growth of around 20% annually in the coming years. While that sounds promising, I'm personally more confident in AMD's revenue growth than its EPS growth. The company is pouring so much into R&D that the earnings are likely to remain volatile and unpredictable in the near term. I fully believe that in the coming years, AMD will have quarters with negative EPS, but still report strong revenue growth. Since AMD is forced to pour massive amounts into R&D just to earn a seat at the same table as Nvidia. That's why I'm not focused on the near-term earnings. Instead, I'm estimating that over the next decade, AMD will eventually convert its top-line growth into solid profits. Currently, Nvidia's margins are around 50%. So even if you get a fraction of that, the profits will be good. So I'm modeling a conservative 18% annual growth for the next 5 years, followed by 12% growth for the next 5 years after that. And as always, I'm looking for at least 12% return on my investment. Right now, AMD trades at a forward PE of just over 40. Historically, the PE ratio has been all over the place, with an average PE ratio of around 140 and median near 100. If AMD achieves consistent 20% growth, I'd be willing to assign it with a PE ratio between 25 and 35. But to stay conservative, I'll use a long-term PE ratio of 27. With these assumptions, the intrinsic value comes around $190 per share. On screen, you can also see different buy prices and their estimated returns. So on paper, AMD looks like a buy. AMD has been an incredible growth story, but with great returns comes great expectations. It's positioned well for the AI and data center future, but is it priced for perfection? It still needs to deliver exceptional performance just to justify today's valuation. That's a big risk, but if they pull it off, the upside could be huge. Personally, I'm not buying AMD at the moment. I'm still relatively young, but I'm also retired from traditional work, and I fully rely on my investment income. A high-risk growth stock like AMD doesn't quite fit my portfolio, even if the risk-reward balance looks tempting. That said, AMD is clearly a high-quality company with serious potential. So the real question is, will you buy AMD? And remember, this is not financial advice, and do your own research. If you liked this video, remember to like, subscribe, and tell in the comments which stock would you like me to analyze next. And as always, do not lose money and safe travels. Bye bye.